And welcome back. So by now you have a pretty good understanding of our different tools, the technical concepts that we use. We've explored each individual pattern one by one, and now we will get into the trade specifics such as stop setting, how to manage a trade once price goes against you, when to cut a trade, how to trail a stop loss, and how to set take profit orders. And now we will get started with stop loss types first, because they are very important. Once we get into a trade, or even before we get into a trade, we have to make sure that we have a good stop loss level. So there are three types of stop loss. The first one is the confluence stop, which probably most of you already know. And the confluence stop uses local price and chart structures such as support and resistance levels, supply and demand, swing lows and swing highs, and Fibonacci levels. So that is how most people place their stop loss. They look for important levels on their charts and then set the stop loss on the other side of such a level, and that is a good starting point. Then the second one is the volatility stop, where the trader looks at the overall market. Do you have large swings? Do you have small swings? Do the candles have a lot of wicks, or are the wicks very short? And then you adjust your stop loss as well based on this chart context. So when the volatility is high, you use a little bit of a wider stop. And when the candles are small, there are not a lot of wicks, then you can usually use a smaller stop. And then finally, the time stop is that once you're in a trade and price does not move in your favor, it is not confirming your trade idea, then usually it is the best thing to get out of such a trade and not hope for a sudden move. By combining the three stop types, we can form and create a very robust stop loss method. So we always start first with the confluence stop. We look at important price levels, swing highs and lows, trend lines, moving average, and then we use those levels to place our stop loss. Then we add the volatility concept to the trade. If we see that there is a lot of volatility in the market, lots of wicks, then we use a little bit of a wider stop. We use something that I call padding, which just means that you use a little bit of extra space on your stop loss when volatility is high. And then once we are in a trade, we switch to the time-based stop, and when you see that price is not following your trade idea, then you get out and wait for a re-entry opportunity. And so by combining the three stop types, you can create a very robust stop loss method. There are three very important stop principles that you need to be aware of, and you always have to keep them in mind when you set a stop. First, and the major one, is that you don't manipulate your stop loss to get a bigger reward to risk ratio. And this means that many traders, they will look at the overall trade they're about to take, then they look for where they want to get out, and then they adjust their stop loss to get a reasonable or a very large reward to risk ratio without looking at the chart context, and then the stop ends up going into a place where it does not make any sense. So that has to be avoided at all costs, and you always have to look for stop levels that make sense in the chart context, and we will get into that in the second part of this video. Then I already mentioned that you always need to use padding, which is just extra room for the stop. You don't just set it right at the support and resistance area or a moving average, but you always give it a little bit of room to account for volatility and also for spread. This is very important. And then finally, you never ever widen your stop loss. When price moves against you, you have to accept it, take the loss, move on, forget about it. Never ever try to fight a loss or try to avoid a loss, because price can go on for much longer than you think. Not all the reversals will happen. Not always does price turn around. So take the loss when it happens. And you've already seen that re-entry opportunities happen very frequently. So now that we have covered the stop loss basics, let's look at a few markets and a few chart examples and analyze how to place a stop loss when we are entering a trade. So here, the first example, we are in this downtrend, very nice trend structure below the 20 SMA. Then we have something like a squeeze trap pattern with probably also here a RSI divergence. Then we turn up here the first time we close above the moving average, which is also then our entry level. So at the close of this candle that breaks the SMA, that would be our entry here. Then the stop loss rule for such a general swing reversal, which is the first of our patterns, is that the stop loss goes below the candle that broke the 20 SMA. So in this case, the stop loss would go here, just below this area. Let me mark it with a horizontal line, maybe then it becomes clearer. Also we use red and make it a little bit bold. So the stop loss would go here, and we don't place it just at the bottom of the candle. We give it a little bit room to account for spread. So here's the entry, here is the stop loss, and then let's see what happens. Price goes a little bit in your favor, it turns around, which is not a big deal. This will happen quite a few times when you are in such a reversal. And here you can see the 20 SMA retest, which is a common pattern as we know. Then price moves again in your favor. We find here resistance again at the previous swing high. We turn down, and here now price moves against you. And let's extend the entry area so you can see price moves all the way against your entry and also beyond that. So if you see this large red candle, it is usually the best thing to close half of the trade, because at that point price is not agreeing with your trade idea anymore. If you are more of a risk averse trader, you could certainly close the whole trade at this point. There's nothing wrong with that, and it is always better to manage your risk than try to push your luck and hope that price is going to turn around, because as you will see in your trading, you not always get such a nice reversal. And usually when you see such a pattern, you have 2 times resistance that's holding, then you see a large increase and a large momentum against your trade direction. It is usually best to exit such a trade. Let's look at another example. Here we have to the downside another trade, probably a head and shoulders, left shoulder, head, right shoulder. Then we have the break of the 20 SMA here. I mark the entry price again for you. So we break above the 20 SMA here for the first time. Here would be the ideal entry. If you wait for the retest of the 20 SMA, nothing wrong with that at all. Then you get in a little bit late, but with additional confluence and additional confirmation. And the stop loss goes here below that candle, because it is very likely on such a pattern that you get a retest of the previous swing low. And so in such a case, if you enter here, you still have a fairly decent stop size, not too large. It gives you enough room for a good reward to risk ratio. And you can see here that on the way up, here is a little supply zone, so this could have been your first target area, and overall that would have given you a very decent reward to risk ratio. So again, the stop loss goes below that candle that broke the 20 SMA, which in this case is this large candle here. So here we have a different pattern, a squeeze pattern as we know by now. We have 2 trend waves. You can argue it's 3, but let's say it's 2 for the sake of this argument. And we have then this very nice squeeze here. We move lower, we shoot up in one candle. The entry, as we know, we don't have to necessarily wait for the break of the moving average. So the entry is right at the moving average here. Let me extend that so that it becomes clear and it's not get lost in the moving average. So that's the entry level, and the stop loss on such an entry is a little bit trickier, because you see if we place the stop loss here at the very bottom, then we would get a very large stop loss and the reward to risk ratio would not be too great. But as I said in the beginning, you don't manipulate your stop loss just to get a good reward to risk ratio. But on such a trap pattern, you usually don't see a whole cover of this wick. So on a trap pattern, it is very rare that you see price come back against you, because at this point everybody has been trapped already. And on such a trap pattern, you can either go halfway or 3/4 in. So if you are a little bit more risk seeking, you can use half the stop distance between the ultimate low and this entry price. Here is a good stop loss place for your trade, because at this point you don't expect to see a full move back into the stop loss. So on a trap pattern, that's how you can get into a trade with a fairly decent stop as well. On the Aussie US dollar, we have quite a few reversal setups happening after each other, so it is a good practice for us to see how we place the stop. So again, we have a short-term downtrend. We have something like a head and shoulders, left shoulder, this could be the head. Here's the right shoulder, where we then start making higher highs. We have 2 breaks of the 20 SMA, so this one is a little bit trickier. Let's zoom in. So here is the first entry. I will mark it here, and also I will use a horizontal line so it becomes clear at which candle we are looking. Let me just get that straight. And we get a vertical line actually here in the background. Let me do that a little bit in a different color so you can see that here this is the candle that we are looking at. It broke the 20 SMA here just barely, but it broke it. So in this case here would be the entry. The stop loss goes underneath the candle that has broken the 20 SMA. In this case it is this one. We give it a little bit room, and then we see that here the next candle is going against the stop. If you are not quick enough, it will take your stop loss. Very frustrating, but nothing you can do. You have to take this loss here at this point. But what happens afterwards? Very interesting. We get another re-entry opportunity. Here we have the second trade on this pattern. You can see that price has put in now this large green bar, and we have moved quite a bit above the 20 SMA. Also we have broken above the previous highs, so very good confluence and very good trade. And on such a trade I would not necessarily expect to see another retracement, because this we could have seen already as some type of trap pattern where we have a very strong move against the trade. So in this case you can use a smaller stop loss here, but at the same time you can stick to the rules. You place the stop loss below the current low or below the candle low, and that is absolutely fine. You still get a decent stop size, a large reward to risk ratio. If we look at profit taking, you can probably expect to see or have your first take profit area at the previous swing high. We will get into profit taking in a later video, but let's just say here is where we would expect to see our first target area. Then you can see overall this is a very decent reward to risk ratio, even if we stick to the conservative rule of going below the candle, which in the beginning is what I highly recommend. If you're just starting out with this reversal trading, always go with the safe method with the stop loss below this candle and below this candle that broke the SMA. And again, don't worry if you have to take a loss here on such a trade. The reward to risk ratio on the overall trades that you get will usually be large enough to offset a few losing trades, so don't worry about that. Just take the loss and move on to the next trade. You can see reversal trades happen plenty, and there will always be a next trade. Let's get rid of this. And then once we move on, we can see price has made this very nice uptrend here. We broke here below this 20 SMA with a very strong, a very large candle. So you can see we have some type of resistance here where price spiked into. Here was the trap here. We shot higher, immediately reversed to the downside. If you are on such a trap, in this case the reversal candle was not as strong. So in this case you would wait for a close below the 20 SMA, which happens here. Let me mark that. So after this long candle closes there, this is where you would enter the trade. And so where do you place your stop? The general would say here above this candle that broke the 20 SMA. But if you remember, we looked at don't worry type of such a trap strong there above patterns all cover, place it halfway, which would probably be somewhere around here. So if you see this, but let's just say here is highly recommend if you're just starting out with this reversal trading, always go with the safe method with the stop loss below this candle and below this candle that broke the SMA. And again, don't worry if you have to take a loss here on such a trade. The reward to risk ratio on the overall trades that you get will usually be large enough to offset a few losing trades, so don't worry about that. Just take the loss and move on to the next trade. You can see reversal trades happen plenty, and there will always be a next trade. Let's get rid of this. And then once we move on, we can see price has made this very nice uptrend here. We broke here below this 20 SMA with a very strong, a very large candle. So you can see we have some type of resistance here where price spiked into. Here was the trap here. We shot higher, immediately reversed to the downside. if you are on such a trap. In this case, the reversal candle was not as strong, so in this case you would wait for a close below the 20 SMA, which happens here. Let me mark that. So after this long candle closes there, this is where you would enter the trade. And so where do you place your stop? The general rule would say here above this candle that broke the 20 SMA. But if you remember, we looked at trap patterns, and when we look at trap patterns, you usually don't expect to see a whole cover again or even a big move against this candle. So we usually place it halfway, which would probably be somewhere around here. So if you see this huge candle, you can then place it in the middle of the candle. That would probably be somewhere around here, which gives you a decent reward to risk ratio on the trade if you would consider the previous swing low as your target. And so this is how you would get into such a trade. Then we have even one more here. We reverse to the downside. We have two trend waves to the downside. We have this very nice double bottom here where we then reverse to the upside. Also afterwards we have a head and shoulders, but at the time of the entry, which would roughly be here, either on the break of the moving average, although this candle closes right at the moving average. Nevertheless, it's quite a long candle and quite a momentum candle, and here would have been the safer entry if you wait a little bit. For more additional confirmation, there was even a third entry. So once you see that price is going against the moving average as well, you see that momentum is picking up again to the upside, and then you could get in here once price moves away from the moving average when the retest has been successful. Also by now we know it is a head and shoulders. So there are three ways of entering such a trade. Here is the more risky one, which is right at the 20 SMA. This one is a little bit safer, although it is further away from the moving average. And then here, probably the safest one is right at this high of the candle. Once we have confirmed the head and shoulders, left shoulder, head, right shoulder, and by then you also have the successful retest of the 20 SMA. So in the initial entry, when you enter here, you again would place your stop loss here at the bottom of this candle and the bottom of the candle that broke the 20 SMA. If you enter here after price has pulled away a little bit from the moving average, you can usually pull your stop loss a little bit closer. Although you can see that this was then pretty tricky, it is very likely that you get taken out here during this retest because it goes pretty deep. So if you enter late, you should probably still keep your stop loss at the original place. You will see that the retest pattern happens quite often, and so don't try to force your luck. Always keep in mind that you should keep some room here for the retest on such a stop loss. And also if you enter here on the successful retest, you then again move your stop below the candle that broke or retested, in this case the moving average, and this in case is here. So let me mark that with the rectangle. If you enter here on the retest, then the stop loss goes underneath this candle, so this would be your stop loss on this retest trade. If you enter the first signal, this would be your stop loss size just below the candle that broke the 20 SMA. And if you enter late here when price moved away, you should also keep your stop loss at the lower level because you can expect the retest, and you should always account for this type of volatility on your trades. So now let's look at an example for a trendline shift stop loss and a trendline shift entry. So we are here on the left side on an uptrend, a slow uptrend. The moving average is right in the middle of the price action, so it's not really helpful. but you can see here are lots of lows hanging around. So let's try to draw a trend line starting here. Probably you can see we get some confluence. We can even extend that to get a better. So we have the trend line here starting, almost a reaction here, good confluence, then we break below it, we retest not only the trend line but also the moving average. And so there are multiple ways of entering the trade. If you want to be a little bit more risk seeking, you go for the first candle after price is pulling away from this trend line. If you want to enter a little bit later, then you wait one more candle once the momentum is more confirmed and price has pulled away a little bit further from the trend line. And on such a trade, you use your stop loss above the previous swings. So here is the trend line retest, and here is another previous swing. And usually the best way to place your stop is at such an area where you have this high confirmation, you have a lot of confluence now, the trend line, the moving average, and also some type of resistance here in this area. So 3 levels in between price and your stop loss. If you enter late, then you either have to set your stop loss a little bit closer, because at this point you probably don't expect to see a full retest again or another retest that would then violate the moving average. But it is always safer to keep your stop loss in the original place, even if it's a little bit further away. And then that's how you would set a stop loss, using the trend line shift. Let's look maybe at one more trend line shift. Again, here we are in this downtrend. Obviously the moving average is in the middle because price swings a lot, but you can see those lows hanging around here. So let's get a trend line. We connect the lows here, then we got confluence here. If we draw the trend line like this, so we have one touch, we overshoot it a little bit with some wicks, small overshoot, we overshoot it here a little bit, not that meaningful, good reaction here. And then here again, very great pattern. And if you remember, we often get such a very nice structure. Resistance, support turns into resistance, and again here we have all this confluence on the entry that we need. So again, the entry happens after price retests it. Here is the entry. Again, if you want to enter here on the first candle that pulls away from the trend line, that is totally fine. If you want to wait one more candle, then in this case you would enter here. But in both cases you have this very nice structure here. You have the trend line, the moving average, and again the stop loss goes a little bit here above the previous swing high. So in this case it depends if you could stay in the trade. You can see here a white candle, a white reaction, a very big move against the price action. So depending on how much padding you give your trade, you will be able to stay in it or you have to take a loss. But if you consider this large payout here, the large potential reward, if you look at the previous swing lows, then you could probably set your stop loss a little bit further away to account for volatility. But in hindsight, that is always easy set. So if you get taken out on such a retest, if you set your stop loss too close above this previous swing high, then so be it. If you can stay in, well done. But don't try to force your luck. If price goes against this trade and you widen your stop loss, you just realize a bigger loss, which is or has to be avoided. And so even if you get taken out here on this retest, if you enter here on this first entry, you still get a chance to enter here on this candle after price has confirmed or fulfilled this retest, and then you get a chance to re-enter here on the second opportunity. So as always, never ever widen the stop, except that you have to take a loss, and don't try to push your luck. Always use reasonable stop loss levels and always use stop loss levels that make sense in the chart context. I hope you now have a good understanding of how to set stops. Again, just come over to the